What is up, everybody? Welcome back to another episode of Real Estate Served on the Rocks, powered by Living in Colorado, The Mile High Perspective on YouTube, Lifestyle International Realty, and Keller Williams Downtown.
And
My name.
Whoa. We got to add E-Mortgage Capital.
And E-Mortgage Capital.
E-Mortgage
Sorry. Yes. My name is Charlie Sardelli, and as
God,
always, I'm here with...
We're going to look like a goddamn NASCAR race car eventually.
Hell yeah.
And Hershey's, Skittles,
We're going to look like
Pennzoil.
what are those jackets that we used to have in high school? Letterman.
Oh,
jackets.
yeah.
Just, I mean, they need to start
Scout
giving some of those
patches and
to Congress members, see if sponsoring them.
Right?
And, as I said, I am here with...
Jameson Amaros.
Oscar Ibarra.
What's up, guys?
I lost my train of thought. You said congressman, and my brain went to Lauren Boebert. Sorry.
Oh, man.
I may or may not have a little crush on her. Whether you like her or not,
He
I
likes
don't
the
care.
crazy ones.
I don't care. Her policies, I don't give a shit. They're just... Anyway.
I feel you. Well, guys, on today's episode, we're kind of going to keep it Colorado local again because there was a big news article that came out about a community down in the Springs that just got hit with a massive bill.
Special assessment.
Special assessment
fee.
For their roofs. But as you guys know, we don't just talk real estate. We also talk bourbon. We review bourbon throughout the episode. And on today's episode, we actually have a really, really cool bottle. I'm interested. And Jameson, you picked it up. Do you want to talk about it a little bit?
We have what would you call this? Like the Cadillac of bourbons?
Four Roses?
The Camry, the Volvo.
What would the Ford? I would say it's the Ford of
You think
bourbon.
it's the Ford?
Yeah.
No,
because
Four Roses is
found on
it was
the road,
original.
Found on the road dead.
1890 something it came out?
I mean, I think Four Roses is more like, I'd say Cadillac. I mean,
Right?
it's
Really?
a nice bourbon.
Okay.
I feel like this is like the staple.
Yeah,
I
that's what
so
I mean
the
by
Chevy.
Ford. Like, yeah, the reason I say Ford is because like this was one of the originals in the United States.
Okay.
And it's kept
All right.
and stayed
So it's
true
like the
to it.
Model T,
Yeah.
is what you're saying.
Yeah, exactly.
Yeah, there you
Yes.
go.
All right.
Yeah, I would say the
Okay.
Model T because if you're talking about the Ford of bourbons,
It's one of those
Jim
where
Beam.
if you go to a bar and you're looking at their like not their top shelf, but you don't want their well, and you're like, oh, I don't really know anything, and you see Four Roses, you go, it's safe.
Mm-hmm.
It's going to give me a nice hug. It's not going to do anything inappropriate to me. I feel good. You're gonna order it.
You're gonna, yeah.
But this is unique. So Four Roses, every bourbon has a single barrel that they always put out, right?
Mm-hmm.
And Four Roses has had their single barrel kind of picks that they've done forever, and I guess they're changing their mash bills on these single barrels now going forward. So they're introducing new single barrel recipes
and for
last year and this year.
for the bourbon newbies, their mash bills are recipe.
Their recipe, and they're distinguishing them by letters. So I don't know if you guys can read it.
OBSV.
OBSV,
Obi-Wan Kenobi
basically. Yes,
should be good.
So this one, it's 50%, so it's 100 proof, single barrel, and it won last year at the World Whiskey Awards, not the San Francisco Spirit Awards, the best single barrel whiskey in 2024.
Nice.
So I don't know what it was up against. I don't know if it was the only one in the category. I don't know if it was best single barrel with a 4-letter name. I have no idea, but it did win. So I'm excited to see it. I believe it's going to be on the sweeter side just based on the tasting notes that are on the back.
Pouring it up.
And hopefully, if you guys are watching this, we changed out the Glencairns. So I'm hoping we actually get like the actual taste of this whiskey. But yeah, we wanted to try something that's been tried and true, and see how it turns out. But I'm excited. I mean, I've always been a Four Roses fan in general. Like, it's just one of those solid. If somebody has Four Roses and nothing else, I won't be upset. You know?
Yes.
Right? Like
Yes.
it's just
Yes,
just
I'm
one
not
of
tuning
those.
you guys out. Sorry, I'm in today's episode. I'm still
I'm on call. I'm working.
I'm on call.
No, and to your point, Jameson, this was like, for me, when I first started drinking, it was Buffalo Trace and Four Roses.
Mm-hmm.
And their single barrel, if you guys know, the normal like Four Roses single barrel is more of like a circular bottle.
Yeah.
With the cap.
Yeah.
That's kind of where I started.
Yep.
Because like what you said, it's standard, right? I am interested to see what this one does, because it says delicate rye on the back.
Mm-hmm.
So I'm interested to see it. But yeah, Oscar made the great point. So these Glencairns that we bought, I want to. So here, hold on. Let me get to Amazon real fast. Yes, I bought these off of Amazon. But I want to read you the description because it was one of the highest rated glasses that was on there. I don't have Amazon on my tablet.
It's
So-
not fully ingrained in every aspect of your life.
No, not yet. Getting there though.
Unbelievable.
For shame.
For shame.
For shame.
But
For
I was reading it,
shame.
and these glasses had like over 500 reviews. It's still 4.7 stars. So I was like, oh, okay. I'll think about this one. So it says ideal for bourbon, whiskey, or cognac. This
Okay.
small crystal glass set of 4 are perfect for you to enjoy any alcoholic spirits with a tapered rim that directs the flow of the drink towards the front palate and highlights the richness of your spirits. So I guess that's the sales point of a Glencairn is that it funnels everything.
It looks like a fancy funnel.
Right? Yeah, that's exactly what it looks like.
Yep.
I'm excited. As I was pouring this out, I didn't really catch a smell of it. Like,
I could smell it from here.
yeah,
Yeah. Like for the first time, my allergies haven't been all wacky and wonky.
and I'm very interested to see what these glasses do.
So I do already feel fancier.
Right? It looks nice.
I feel like a classy man.
Mm.
I'm a classic man.
This is not me coughing because of that. Promise. But I do like that I can actually.
I can get a burn.
Yeah, this is already different.
It has a burn, kind of like a permanent marker kind of
Yeah. Mm-hmm.
smell to it,
Which is interesting.
like a Sharpie.
Yes. So I'm wondering if that is actually because the glass is
That's
funneling
what
all
I'm
the
saying.
ethanol up.
I think
Now
that's
we're
what
gonna
it
have
is.
recall all the bourbons we drank, which some we
Hey,
can't
we got
get a
them up
hold
here.
of.
Yeah.
Well, since the beginning, and then try with these, and it's gonna
Yep.
be a long day.
all 90, all 94.
All 94.
I don't know if I can
No,
pick up
no,
my daughter
minus
after
2.
that.
You're right. Brown bags.
The brown bags,
Yeah,
guys
watch
getting-
me put the brown bags and you're like,
and it's
wow.
delicious.
Actually,
that old lady had something going.
yeah. You know what, guys? I have a whole new respect for Fireball Sour Apple.
for old school. Or, no, what was it called?
I don't fucking know, dude.
Old
Yeah.
age or whatever.
Old age. Yeah.
Was
Something
it
like that.
old age? That's what it was called.
Something like that.
Yeah, one was old age and the other
Probably
one
because you
Bench
drink
age?
it and it
Ben-
ages your liver 30
it
years.
was old age and benchmark.
Are you guys getting any other aroma?
I'm getting Sharpie.
I'm getting a little bit of like candied apple.
Yeah,
Mhm.
candy.
A little bit of candied apple.
some
A little
green
bit of
apple.
sweetness. Mhm.
Yeah,
Not really getting.
But a lot of it's ethanol. But I think it's because
there it goes. Hold on.
you got it. Like you got to go
Yeah.
past that ethanol.
you need
There's
to
the
probably
wood.
swirl it more.
Oaky. Very oaky.
Yeah,
Wow. Okay. So you got to swirl in these motherfuckers.
yeah. It ain't gonna give it up lightly.
You got to
Okay.
open it.
No,
Yeah.
no,
You gotta
this
work for
isn't.
this.
Listen, Charlie, this is not a first date kind of glass.
You're right.
Okay,
You're right.
you got to work it a little bit,
Mhm.
like T-Pain said in that song.
Booty work.
Work it.
All right. Well, gentlemen, cheers. I'm going to take the first sip. Let's see what happens.
Salud. Whoa.
Mm.
Ooh,
It's pretty tasty.
that is pretty tasty.
It's-
we might have to
it's-
clean these glasses out and pour pour the other ones in here because
It's
that's
it's,
wild.
It's sweet and
Wow.
very, very
Yeah.
flavorful.
But I mean, I get the sour on the front,
Mm-hmm.
and it stays.
Wow.
I get the oak on the back end, with some like candied apple, caramel.
A little bit of like chocolate.
Mm-hmm.
A little bit of spice,
Yep.
Mm.
The spice comes in at the end
Yeah.
too. Really hits at the end.
like up front, kind of like a Fireball candy,
Uh huh.
and then at the end, very peppery.
Mm-hmm.
Yeah, like a crushed black pepper.
Yeah.
Yep.
Wow. These are magical.
I'm gonna say this is gonna be crazy,
It's like on Beer Fest.
right? Yeah.
It's like it's so magical. I want to freeze it and skate on it.
I want to have sex with it. I want to put.
Interesting. Huh.
Now I'm really interested to see what JC's glass does.
I mean, it should.
Mm-hmm.
You know, the glasses like this that don't have a stem that kind of
Yeah.
they go
Roll
like,
around.
You know, they swirl around
Mhm.
for you. That's what they look like.
I
I like them.
it. I like
Me
it.
too.
It's gonna be sick. So basically, what they say on their website
That
as far as
chocolate
these
is
heavy,
on the top. It's on the roof of my mouth
Yeah.
though, is where I'm getting it.
and it's like a dark chocolate,
It
like
is.
an earthy
Yes.
chocolate.
Right,
Mhm.
Friday.
Yep.
That's delicious.
So the palate is supposed to be hints of ripe plum and cherries. On the nose, dried spice, pear,
Yep.
cocoa, vanilla, and maple syrup. I got that once we
Maple
swirled
syrup.
Yep.
it. 100% the vanilla came through for me.
Yeah.
And then it's supposed to be smooth and delicately long.
Yeah. No, I get that.
Delicately what?
Long.
Like
Long?
it,
Like a long,
like it,
yeah.
it lingers.
I could see that. Because even on the tip of my tongue, I still have the slight burn.
Yeah, I like it that it's hitting the tip of my tongue, but the roof of my mouth is still getting that dark,
It's almost like the
chocolate covered cherry
aroma,
and,
like the ethanol is burning off your tongue and rotating
Yes.
to the roof of your mouth.
Yeah.
Yeah, 100%.
Interesting.
Might have just changed the game here, boys.
Wow.
A little bit.
Might have just changed the game.
Those descriptions were kind of
We got these other bottles we might have to crack
Yeah,
open.
that's what I was saying. Might have to give it a try.
that old
Interesting.
Mhm.
I'd like to taste that old Alpha.
Yeah.
Interesting.
So, and what's cool to me about
Yeah,
this,
that was
and honestly, like, first off, last week we hit a huge milestone. It's been 3 years of real estate served on the rocks. We're all brought together. September 21st, I saw Jameson posted a picture of us in the office, and to see how far we've came, it's
Wild.
been incredible. So thank you to everybody who's watched, subscribed, followed, asked us questions, anything, because the journey's been incredible, and just extremely grateful to be able to do this. With that being said, one thing that I learned throughout all of these 3 years when it comes to bourbon is the difference in the viscosity, like the mouthfeel. And with the single barrel, it makes so much sense that it's so light on the palate because it's one barrel. They don't filter. It's just mixed, one barrel, and then it's poured out.
Yep.
Like, it's so light on the tongue, and I don't know about you guys, but that's what I'm getting from this. It's just smooth.
Well, and the complexity that comes with single barrel. What was that other one that was just kind of? It was this one, the Ironton, that was just very mute. I'd like to see what that tastes in these glasses, because when it's single barrel, you do get a lot more concentrate. Of the mash bill.
And the Balcones guys described it, right? It was
I like those guys.
Was it the acidity? And it was like that silky.
That's
or
what,
the oil.
it's more oil. That's what I mean.
oil,
There's more oil in it, and then it makes it lighter on your palate because there's more oil supporting
more oil
the bourbon.
because it's not filtered over and over again.
Yep. It's
So
weird.
you get that silky texture. Yes.
I'm not gonna lie. After last week, I was kind of worried when you brought in another single barrel.
Yeah.
I was like, I don't know, but I wonder
if this
No, I think it's
This-
the glass.
lets it open up slower.
Yeah.
because I had to swirl the shit out of it
Right.
to actually get anything out of it. This is gonna be cool. This is gonna be an even better experience.
Interesting.
I'm happy with it.
Interesting.
With that being said, too, guys, we are working on the giveaway for episode 100. This is episode 93. If you guys go to our Spotify, iTunes, you will have some episodes there that we don't have the video for. We're going to add the audio to our YouTube channel so you guys can still listen to the episodes there. But those videos took place at the Rouge, so we're not going to be doing the video portion of that. We're just going to use the audio. So check us out on Spotify, iTunes, Pandora, anywhere that you could listen to podcasts, and you can get caught up on those episodes. And
You
then
don't have permission to have the episode.
we're not doing it.
It's not permission. It's more principle.
Oh,
Yeah.
yeah. Damn it.
So definitely check those out. But again, thank you guys so much for subscribing, following, asking questions, supporting us over these last 3 years. It's been great. Let's go ahead and get into the topic for today's episode, which some people are really mad down in the Springs, guys.
Yeah.
Yeah.
I mean,
Yeah, they are.
So we've had those clients in the past that make a phone call and they say, Oscar, something's going on with my HOA, and all of a sudden they're wanting $1,000, right, in the next month or two. Sometimes they spread it out and you pay it in payments, and it's usually because of a special assessment. Special assessment is where something happens to the community, either common areas or your unit, that is unforeseen, and they need to pay out of budget. So the budget exceeds the budget, and they don't have enough money to cover the work or maintenance that needs to happen. So they call in a special assessment and they spread it out throughout the homeowners. Well, in this case, it wasn't $1,000. It was $20,000 per unit.
Mm-hmm. Yep.
Now, there is some cover that you can have for this, which is an HO6 policy, which helps you with any special assessments that come in, and then you pay a deductible. But I'm wondering, even with that, is there caps on HO6s? Like, would your insurance?
There can be. I mean, it's a rider policy, but
Would your insurance company come back and say, well, we're only covering, 10 grand of it?
it depends on the policy. I mean, essentially what happened was we had a hailstorm,
Very bad hailstorm.
right? And this is the issue that we've seen and let's be honest, right? It's affected single family, it's affected multifamily in different ways. For single family homes, when you have hailstorms run through and decimate an area in Colorado, right? You see the roofers come out, hey, we're going to do a free roof estimate, blah, 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 blah. And they'll come in, and you pay a deductible on your insurance, and they end up replacing the roof. You end up selling the house later, and the new owners come in and they try and get insurance on that roof, right? And we had Mason here a little bit to kind of talk about that a couple episodes ago. Well, remember, if you have a claim on your house and you move, the claim doesn't necessarily follow you as a homeowner, but it usually stays on the house for a minimum of 5 years, right? Mm-hmm. So if the new homeowner comes in, tries to put new insurance on that house, they're going to run that policy and go, well, the loss report shows that you had 2 hail claims within 5 years. It makes it very hard or expensive to get insurance on that home, right?
And you may think that's very unfair. Why would it stick to me if it's the house and the previous owner? A lot of insurance companies, well, most, correct me if I'm wrong, they have an area of high, it's like high risk, right? Mm-hmm. And your parents, I believe, were dropped because of fire and stuff like that. So if you're in a high risk area and there's a bunch of policies on it, that's why they won't insure on the house.
Right. Yeah, and it could be an individual house, it could be an area, it really depends. But what we're seeing is, as in Colorado specifically, with hail specifically, as these claims continue to pile up from a single family standpoint, from a multifamily standpoint, the insurance policies that are being issued for these buildings are getting more and more and more expensive, right? So, for example, we used to have it where you get an insurance policy on a home and you would pay you'd have a deductible. Say, okay, well, I want my hail and storm damage on my house to be $1,000, $2,000, $3,000, $5,000 deductible. Well, now you're seeing insurance policies go, well, actually, it has to be a percentage of the total home replacement value, which could be 1%, 2%, or 3%. With townhomes and condos, you got to think, if a hailstorm hits a townhome, that could be 30 units, 50 units, 100 units, and the amount of roofing, right? So let's say, I don't know, Oscar, how many square feet is your house? You just replaced your roof, right?
Yeah.
What was the dollar amount on your roof? Like just straight dollar amount?
Dollar amount, I think I was 41,000.
Okay. And your square footage is
48,000.
4,800 square feet, right?
Yeah.
So now multiply that by 10 for a smaller townhome.
Well, it was roof and some paint,
right?
But it was the roof alone was like $30K.
Yeah, so you're talking $30 million to replace a roof damaged by hail. So even with the deductible, what's happening is these townhomes are going, okay, yeah, we have a 10% deductible to pay on a $30 or $40 million claim on a roof to get.
It's pricey.
That's a $3 million deductible, right? So do they budget for it? They try. Right? And that's why it's important. And that's why if you're ever looking at buying a condo or a townhome, well, we've gone through this multiple times, the lender goes in, and one of the things they require is they have to look at the financials, because they want to make sure if they're lending you money to purchase a townhome or a condo, the financials of the townhome and the condo support the potential of something like that happening.
Mm-hmm. You get budget and you get minutes,
right,
to see who approved it, why they approved it, and what reasoning behind it. And insurance, typically you're like, well, I'm a safe driver, or whatever the case may be. You typically get insurance for outside sources of, you don't know, chaos, right?
Right.
Hailstorms, other drivers if you're in your car. So you always want to insure yourself when any situation's out of your, I guess, not control, but if someone else is going to make decisions for you, like how much they budgeted for this, and if they didn't budget enough or they didn't foresee something like this, which who could foresee a really bad hailstorm, but it's a possibility.
Well, and here's something that I want to...
You want to cover yourself financially for that.
And I want to make the point on that too, Oscar. You bring up a really good point. The one thing that, don't get me wrong, I understand people's disdain for HOAs. You own your house, it's your house. They shouldn't be able to tell you what to do, how to do it. But at the end of the day, they set regulations that keep the neighborhood up to par. You're not going to have broken down cars. You're not going to have, unmowed grass and terrible landscaping. It helps with your curb appeal. But the thing that I want to make sure is known is that your realtor, if you're looking at a townhome or a condo, your realtor should be reaching out to the HOA to see if there's any special assessments coming up, if there's any special assessments that are on the docket. Your realtor should also be asking to see what the budget looks like, because that will tell you a lot about a townhome or a condo experience. Because if you look at those minutes, if you look at the budget, they will show you, they legally have to show you how much they have in reserves. And if you're moving into a place and, you know, you get your inspection, like, oh, the roof looks good, but, you know, there could be damage. And then you go, hey, well, realtor, can you check on the budget for me? Because the inspector said that this roof needs to be changed, and I just want to make sure. And your realtor should go in and see, like, oh yeah, they don't really have anything in reserves. So if they do choose to do this roof, it will be a special assessment. You will get a charge for it.
Right. And the roof, then it's hard from a townhome and condo standpoint, because when you're buying something, right? And I just had this conversation with the client. You're buying it as is where is, right? You're not buying it for a potential future issue, because you as a townhome owner are not in charge of when the community is going to replace that roof at all, right? And you can't predict when a hailstorm is going to come in. The problem, and what happened in this particular community in Colorado Springs, is that hailstorm came in. It did extensive damage to the roof, gutters, siding, paint, windows, etc., in excess of $30 some odd million, right? And that deductible, based on inflation and everything else, and repair costs and labor costs, came out to $3.6 million that they had to pay. And if you spread that out across all of the homeowners, it was around 20 some odd $1,000. Well, the argument became that the declaration initially put a cap on the assessment charge could only be up to $10,000.
Yep.
Well, when that declaration was drafted in 2006, the deductible limit was a lot less, because the insurance landscape was different in 2006, which is, oh, by the way, almost 19 years ago, right?
Well, also to touch on that, as a current HOA member, because the HOA is homeowner association, as a member, you have to make sure you read into the new policies coming in. They're going to renew the master policy. When you're living in a condo, you have your own. It's kind of like a renter's policy. It's paint in, and then you have the master policy that covers the exterior and everything else. Well, those renew, and you got to look into what they're renewing to. It might be a little bit less expensive, but then you have that percentage, right?
Correct.
And to touch on Charlie's point, as a realtor, you want to ask for all those things, but I take it a step further. On the contract to buy and sell, section 16.2, on when it comes to HOA assessments, I write in there that the seller is going to cover any special assessments at closing.
Yes.
So if there's any assessments left over that they're paying monthly, you cover those. So my client goes in with no special assessments due.
Yep. And I actually, on one of my first transactions out in Littleton, it's exactly what we did. We found a townhome and condo for them that kind of checked all the boxes. But when we looked, lending saw, oh, there's an assessment coming up. So we went to the seller and we asked, like, hey, will you give us a concession that covers this assessment? Because my buyers they weren't here for that. So it's not their responsibility.
Or just have them pay it.
Yeah, and that's what they did. They basically just left it in escrow.
On the settlement
gave
statement,
it to them.
You're paying up the special assessment.
Yep.
I see clients going into a home, and I try to take it like title does. They want clear title. I want clear slate for them. I want them to move into the house and not have to worry about stuff that they didn't have to worry about prior to moving in. Their special assessments, I want them to go in clear, so they're not owing that either.
Yep. Well, and just to give an idea, right? So Colorado, Jamison mentioned it earlier, we are top 3 for insurance companies when it comes to like the red flag. I think it's Florida, us, and California. And we have the trifecta. We have hail. In 2023, we were highest car thefts in the country. We have wildfires and
tornadoes.
Yep, tornadoes and flooding. Like we literally have everything here. And we're starting to see now the effects of that happening, especially with the Marshall fires that happened out in Boulder. But on average in 2025, I'm talking from 2024 to 2025, Coloradans are going to see a projected increase of 11% for their home insurance.
Sure.
And that's significant. The average, as of right now, the average annual cost is $6,630.
Flood insurance, if you go through FHA, you can't shop it. You could adjust your deductible, but if it's FHA, you got to go through a certain flood insurance, and that's expensive.
Well, and here's, I don't know.
And it's crazy because it's a map, a FEMA map that says your house is a flood zone. If it flooded once in 100 years, it's a flood zone. So you could say there's no bodies of water and I'm not lower than any of my surroundings, but at one point it flooded. So you have to have that flood insurance.
Yep.
If you have a loan. If you own your, again, all of this surrounds, policies that like HOA, it's a third party. But if you own your house free and clear, you do how you want. You don't need insurance.
Yeah.
Well, and
it's risky, but I don't recommend
the
it.
Occam's razor that the HOAs for townhomes and condos, and in this scenario, I think this just kind of highlights that problem is they have to make a choice, right? Because at the end of the day, you're either going to have to assess a special assessment, or you're going to have to raise HOA fees, right? So now it's like, well, do I feel better about paying $300 a month extra, or do I want to pay more, a little bit more on my insurance, or do I want to hope that I don't have to pay a special assessment? Like, there's not a good way to do it, because essentially, and this article does highlight this, the policy of the declaration that this particular HOA and townhome had was built around purchasing an insurance policy for this townhome that quite literally no longer exists or is offered or can be purchased, because there is no such thing for condos and townhomes now that have fixed deductibles for wind and hail, because it has gotten so expensive. It is now a percentage based deductible. And the other flip side of this, and Oscar, you can speak to this, is if I'm a lender and I have to lend on a condo and townhome, there's certain deductibles on that insurance policy that I have to be under in order for a lender to even loan on it. And if you're not, you can't lend on that. And if I can't lend on a townhome or a condo, it doesn't benefit them to have that policy, because now as a homeowner, I can never sell my property. So now my property values don't go up, right? So you're towing all these different fine lines, and it's all based on the absolutely outrageous cost that insurance has gotten to in multiple areas, which again, that's an argument for another day. But I think that's like, I understand how angry these people are. And I think there's ways, right? We talk about the HO6 policy, and it sounds like a majority of the homeowners did. And I'm not making fun of anybody, but based on this picture, there's 9 people that are protesting in the screenshot. I'm assuming those are the 9 that don't have HO6 policies, right? So if you're buying a condo or townhome and you're talking with an insurance broker to get homeowners insurance, HO6 policies that have a rider for special assessments are a must-have, especially in Colorado, because those are the ones that you can then file a claim to have them pay for any special assessment. And then you basically just pay deductible. So maybe that's a $500 deductible. If you get, in this case, a $20,000 special assessment that's due in 2 months, you pay a $500 deductible on your HO6 policy. And then your insurance takes care of the other $19,500 that's owed, and you're free and clear. Sounds like some of these people didn't have that. Maybe it wasn't talked about. Maybe they didn't want to spend the extra $19-20 a month that it cost. I don't know. But it's something that you want to discuss.
And a lot of these people, I'm sure, didn't buy just recently. And I've yet to go to one of my HOA meetings.
Sure.
A lot of people don't go. Life
Correct.
happens. I get it.
Okay.
And what sucks is that, if you don't go, you don't know. And then these decisions are made for you and they impact you financially. And what sucks is, I don't know what, I didn't finish reading what HOA company manages this. They're just there.
Dude, they change hands every.
Yeah, they're just there to. They're there to manage financials and paperwork. They're not the ones setting these rules.
Correct.
The governing party gets together and does it, and that's the homeowners.
Yeah, but see,
and then what sucks is that you have, so they're going to lose out, and a lot of these people are elderly. They have fixed incomes, and I don't know if they had time or the capacity to go to these board meetings, or if they even had the understanding for a lot of these things. And the Marshall Fire you talked about, these people, hell, they lost everything, and Excel's like, throwing money. We're not criminally charging ourselves with this. Yeah, bullshit. You should be responsible for this.
Well,
whether you had any fault or not, be responsible for it.
Well, what kicks in October with Excel?
They're going to hike it up 11%.
From 5 to 9 p.m. It's going to be a hot time, and you're going to have to pay more. And that's why I say it's a It's 100% a perfect storm right now. You're good, Oscar. Go for it. It's a perfect storm right now, and you have Colorado where the damage is there and all of the natural occurrences, but we don't have anything right now pulling in to regulate the insurance companies.
Right.
But it's a free market, 100%. They can charge for it, but if we don't stop it, if there's not litigation and or legislation and we don't get involved, it's going to run rampant. Polis the governor here in Colorado, Polis has talked about it. The mayor of Denver has talked about insurance rates rising. It is a big problem, especially because one thing that I've ran into with a lot of my first-time homebuyer clients with townhomes and condos, you mentioned it, is FHA, first-time homebuyer loans. They will not write on a townhome or a condo that's above a 5% deductible.
Right.
And we've seen, I think the last number was like 55% of townhomes and condo HOAs have increased their deductible.
They have to.
Yeah.
Because again, that's the thing. They either increase the deductible or they have to jack up the HOA monthly.
Yep.
So the problem, and that's the problem, right? Now, I could do some research on here. I almost don't want to because it's depressing, but something came out where there was like 3 different insurers that posted record profits in Q1 and Q2 of this year.
Yep.
Even though they were saying that they were losing money
Excel's one of them.
on policy.
Excel is literally one of them.
How is Excel? What do you mean Excel?
Excel was asking
What's
this
Excel?
year. Excel Energy.
No, I'm talking insurance companies. Excel's an energy company.
Well, I was going to say that Excel in general.
No, I know, but I'm saying
like-
what my point is,
Yes.
if you've got insurance companies that are saying we're upping the policy, and you've got HOAs going, okay, well, we have to have a 10% deductible versus a 5%, but that's preventing lenders from being able to loan on properties to make it cheaper. But then you have those same insurance companies going, well, we also have record-breaking profits. Even though we're saying that we're paying out more than we've ever done, it kind of makes you wonder who's...
Yeah, which numbers are getting fluffed.
Right, exactly.
100%. And,
and I'm not getting fluffed.
No.
Are you getting fluffed?
I'm not getting fluffed.
Are you getting fluffed?
What are I walking on?
Yeah, what you're not walking in on is either of us getting fluffed.
I'm not getting fluffed either.
Right, exactly. That's what I'm saying. So yeah, I think it's at some point though it's going to break. Like the system is going to break because if the condos and townhomes, if you can't sell those properties, obviously those prices are going to decrease, right? And then if people can't pay,
or prices decrease, or what happens?
Or they're going to get
bought by
foreclosed
investors.
on. Well, right. But what I'm saying is the investors, even if they're paying, they still have to pay insurance policies on them. And if the investors can't pay, then they're going to go vacant, right? If they go vacant, now you got to go rent. But you still have somebody that owns them that still has to pay insurance on them. And if they can't pay, at some point, something's going to break.
Well, and I think what we're seeing in real time with this is the wealth gap.
Yeah.
100%. Because, and the reason that I brought up the condos and the deductibles and stuff is because townhomes and condos are primarily utilized by the elderly who are trying to downsize and get more comfortable without, going into a home.
Yeah. I mean, they don't want to deal with lawn care.
Yeah, exactly.
And so it's a lifestyle change.
Or first-time home buyers, right? And if you nix out the ability of first-time home buyers to do this, but then you also nix out the older population because they're on a fixed income and they can't afford these increases, then where does that leave you? You're destroying your home ownership. You're literally putting things in place that make you a rental state. And that, for me, is my biggest fear with Colorado, is that we're years behind in our legislation to try and limit these things. And I just feel like we have a lot of eyes on us. We have a lot of crosshairs with a lot of people with deep pockets. And we've seen this since 2020 with the low interest rates, that they will invest here, they will buy here, and they will buy up a lot of inventory. So my fear is that people won't be able to buy, they won't be able to qualify for these loans. And then now these places are going to get bought up, and now it's just going to become rentals. And we're even further into the rabbit hole of inventory and a rental state.
Should we have someone in politics come in?
Yeah.
I know a few people.
Yeah.
We tried to get Mike Johnson, remember?
Yeah.
Well, no. All right.
Mr. Mayor's office, you just stopped answering me.
I might. I have a few friends.
Yeah, let's do it.
And with that, ask them some good questions.
Yeah.
You know what's crazy about this though, and I think this is where people get caught up, right? And I'd like to know, and maybe I'll reach out to Tony Keith actually.
Tony
Tony
Keith. He passed away already.
Tony Keith. He's the gentleman that I went to high school with. Friends on Facebook.
News anchor.
I haven't talked to you since high school, but He's a newsacre down at KOA in Colorado Springs. He did this interview with these homeowners. I would like to know, just for our own information, the homeowners that don't like, I want to know the percentage, because as far as I understand it, you have your HO6 policy, right? And the loss assessment rider is only on average, call it 75 at most, $100 a year to add on. So is it just that they just decided not to add it on, or were there policies that were newer that the loss assessment was assessed prior to when they own the building, and now they're caught holding the bag, and those are the individuals that are being charged $20,000? I just want to know how that is getting shaken out for those individuals.
Well, and something that I think it kind of got glossed over, and it was literally just a sentence in the article. If you watched it on the news or read the article, it said that this decision wasn't made lightly, and they did hold a public
no, I understand
discussion.
That. They have to, though. It doesn't matter.
But the reason I say that is because I fear that, Jesus, the amount that I've changed in the last 3 years, I feel that.
Oh, you are a caterpillar now. Now you're a beautiful butterfly. The fuck do we get ice cream?
I feel like the personal accountability is not there. And what I mean by that is, don't get me wrong. Yeah, it's, if I got that message like, hey, you're gonna have to spend $20K in the next 2 months,
right?
Yeah, I'd flip out about it. But at the same time, where were you and why was this sprung on you? And for me, like Oscar said just before, he's like, I haven't been involved. It's easy to skip these HOA meetings.
Yes,
but that's the only way you control it.
Well, and here's the other piece of this. I, as far as I understand it, it was less of a, hey, come to this meeting so that you have a choice. More, this is a courtesy meeting because, yeah, this is not a decision we have to make lightly, but it is a necessary decision because we have $30 million in damage that we have to fix, whether you like it or not. But you can be involved in the conversation. Mm-hmm. But the 20,000 is going to get assessed regardless, right? Like that's what it was going to be. Like there was never going to be a workaround of like, all right, guys, let's go and come to the table and let's get some ideas. Maybe if we do like a community-wide OnlyFans for the next 6 months, we'll raise funds.
We'll go door to door.
Right, you know what I'm saying?
Each day of the week is
that's not going to be a thing, right? It was like, hey, here's the deal. It's going to be $3.6 million. We're going to divide that up. It's going to be a $20,000 assessment. Hopefully you guys understand what your HO6 policy does and does not cover. You should have a rider that includes loss assessment coverage, which is either a $500 or $1,000 deductible. Hopefully it's the lesser of the two. Here's how you file a claim. Here's the paperwork on how to file the claim. If you don't have that, this is when the due date is. We're sorry, but that's what it is. Like that's what that meeting was going to be. Now, if you didn't go to the meeting and you're blindsided, yes, I agree. That's a different story. Mm-hmm. But I don't know if being there or not being there was ever going to change the conversation because the hail damage happened. And I mean, I lived in the Springs for 3 years, right? Like the hail damage down there, like it's a whole different animal.
Significant, yeah.
And they would have had to fix it regardless, right? Because let's say you don't fix it. And let's say that was the argument. Well, we wouldn't need to fix it. Okay, cool. Let's say 3 years goes by and all of a sudden, maybe only 5 people's condos got really affected by hail. And they wake up one day and all of a sudden now their condo, those 5 condos are flooded because of leaks in the ceiling. And it was only the top condos. Now, what are those people going to do? Well, and you know what I'm saying? Like, yeah, but you still have to protect the whole community.
There's also an element there where I don't think people or realtors explain well enough about what a townhome or condo community is.
Oh, I agree. 100%.
Right? And that's 100%. Where it's, like condo and townhome community is literally an apartment building that you own. That's what it is. They're going to take care. Correct. A lot of them take care of snow. They take care of your water. They take care of the trash. Mm-hmm. That's why elderly tend to move in there because it's peace of mind, right?
Yes.
But it doesn't
low maintenance.
Yes. But it doesn't get explained to them that all of those things cost
money
because of the HOA.
Correct. Yes.
And you have those things that are there because of that. So it's and you
don't get the choice, right? Yes. Like I can get we can have a hailstorm right now at my house. Mm-hmm. I could make the choice. Like when one of 472 roofers call you, which by the way, stop fucking calling me. I can say fuck off, or I can say, yeah, you know what, come out and come check my roof. Mm-hmm. I can make that determination for myself.
Yep.
If you live in a townhome or a condo, no, the HOA makes that determination.
Yep.
And if they determine, yeah, we need to file a claim.
But that's why, again, it's so important to be involved with your HOA. If you don't like having an HOA, be more involved in your HOA because that's the only way that you're going to control it. And I mean, guys, you see it across the country where we just saw it. Look at just what happened with Cracker Barrel. Like, if you agree with your community and you guys work together, you can make change. You can set these things. Then guess what? That reserve budget.
Look at the Coldplay concert.
Yeah. But my point too is like they have money in reserves. So in my mind, why wasn't anybody looking at their reserves and going, "Hey guys, we're not prepared for something to happen."
But even with reserves, right? It's hard because again, if you look at, I would argue that there are very few condos, townhomes, HOAs that have $4 million in reserves, just straight operating costs.
But I get that.
That's why you have an insurance policy,
yes,
right?
But my whole point in that is like you just said, Colorado Springs knows it, right? Like they know that they're hail heavy. They know that they're going to have this happen. So why isn't? And again, I'm saying this as somebody who lives in an apartment community in North Glen. I don't have to deal with it, but why wasn't this on the radar? Like why wasn't this something that the people were asking, like, hey, do we have, if something were to happen with hail and we needed to have a special assessment, do we have enough to cover the deductible at least? Right? Because if everybody's having to pay $20K, that's telling me that they weren't really planning.
Yes and no.
Mighty dollar. I mean, at the end of the day, the way insurance policies were structured, $1,500 to $2,000 deductible was going to save you on your premium a whole lot of money. The higher the deductible, right? Yep. When I was touching on the whole FEMA floodplain, because you cannot choose your different insurance provider for FHA, you can up the deductible as high as they'll allow you to reduce your premium. In this case, they probably talked about it, and the difference was that now they had to do a percentage, and a 2% is going to be a lot higher premium. You go 3%, 4%, I don't know how many percent you go up, it's going to save you monthly on the premium, so they want to keep the HOAs lower. So, some
But I mean, come on,
budget savvy people probably got together, and they're the ones that go to the meetings and say, okay, let's go that route.
Yes.
And then it bit them in the butt.
But my question is too, is like, why, I don't know.
But that's the point I was making earlier, right? Like if you have that choice of, do we raise the deductible?
You roll the dice.
And then you have to now up the HOA fee, or you choose a deductible with a higher percentage. And now all of a sudden you go, okay, well, I'm a homeowner, I'm going to vote for that. But that also means now that my property value is going to tank because I can't resell this property because I can only sell it to a cash buyer.
If you're watching this video or listening to it on audio, leave us a comment. Let us know, how do you feel about it? What would you do? Would you pick a higher deductible for a lower premium?
And then we can get into the whole idea that there's insurance companies for insurance companies to insure the insurance companies.
Policy.
You know what I'm saying? It's crazy.
I don't know. It blows my mind how.
With the loans, what happened with the loans?
Yeah.
I mean, everybody's like, oh, well, the banks took, a bath. Did they? Because they had MI. So they pocketed the money for MI, and then they got a bailout.
Yeah.
And then they sold the property.
Yep.
They got paid out 3 times. Some of them, not all of them. I don't know.
They got fluffed.
Don't come after me.
Yeah, they got fluffed.
They got fluffed pretty good.
Right. And you know who didn't get fluffed? The consumers.
Yeah. There was no fluffer
that's
for
what
the
I'm
consumer.
saying. And I agree. Like Charlie said, what do you guys think? Because I personally, I don't think there's a right or wrong answer because I think everybody's different. I think what you can do, and I've always been of this mindset, is you can play the game to the best of your ability to where it benefits you. So for me, in this scenario, it's, okay, I live in Colorado Springs. There's hail. I'm part of a townhome that has HOA. I'm going to protect myself in a way that makes sense. So I'm going to make sure I have my HO6 policy with a loss assessment rider at a low deductible. So yeah, it's going to cost
a manageable deductible.
It's going to cost me $85 extra a year. But that means that if I get fucked, the worst that's going to happen is I pay a $500 deductible versus my neighbor who's going to pay $20,000 in 2 months. Does it suck? Sure. Does it suck to play the game? Yes. However, $500, $20,000.
I'm interested to see how, because they hired a lawyer.
Hold on, not only $20,000, but you also have to go to Michael's. You got to go buy colorful poster paper. You got to buy markers. You got to sit outside and protest. Like there's a whole thing.
Well, but that's the thing. They hired a
now
lawyer.
You got to file a class action lawsuit.
Well, and that's my point. I'm excited to see what happens because this could end up being a landmark case.
It should. It
100%.
should, because if anything, like not for them.
What does a good attorney always do in court? References other cases to win. the case he's
Yeah.
he's in. So they use references to other cases.
Listen,
This might be a case.
after what we
Yeah.
went through 2 years ago, how everybody came after us for no reason. I'd love to see somebody come after the insurance companies.
Yeah.
Because you want to talk about a racket and price fixing
Yep.
and all that bullshit.
Well, and that's where I was about to go.
Come on, dude.
So right now, right?
Come on.
Right now. the
And who keeps
biggest-
on winning? Sorry, attorney friends, but
But
like, go after something that matters.
well, right
Right.
now, okay, we're not. In the
About to get
past,
spicy.
everybody said, "Oh, well, the housing market's going to bust. It's going to break. It's going to." No, we have too much equity for that. But
they're trying.
what could happen is insurance is not regulated. They can raise your insurance or they can drop you completely if they want to. And guess what? You have no recourse. It is an independent company. If they want to raise the rate, they raise the rate. And if you want to keep that insurance, you better pay for it.
and guess what? Another insurance company that's going to come in and replace one, they're going to do their due diligence and find out why. And they're like, well, maybe we don't want to, or this is a higher risk scenario. We're going to charge you more.
Well, we
Oscar,
talked about
let's have this conversation real quick. Over the last 2 years, how many deals have you felt a little uneasy about falling through because of homeowners insurance cost?
Well, if you take in consideration ratio-wise,
Just in general, like not even
because
ratio.
there's a lot.
Not even ratio. I'm talking from a consumer standpoint. Going, I was not prepared to add X amount to my monthly payment.
Yeah, I want to say about, if you're percentage-wise, about 40%.
Right?
Yeah.
So I would say the same, probably between 30 and 40. We've gotten to the point, and I've like when we talked about this, right, Charlie? I think on another podcast where I think we've all done it. Put our insurance termination deadline up 2 weeks because I don't want to deal with it. Like you need to figure this out sooner rather than later. And I just had it on a Pradera house and this is why I brought that up. It had a couple claims on it. And the first quote, now it's a $1.4 million home, right? So it's nice. It had a hail claim and a water damage claim from a water leak that happened while the house was vacant, right? So nobody's fault. Just water leak, nobody caught it because it was vacant, whatever. The first quote we pulled for this home, it's only 5,600 square feet, from State Farm, $22,000 a year for homeowners coverage.
This one that I was just
That's
working on.
$1,600 a month.
Shop your insurance, first of all. Let's just start there.
Here, hold on.
Because a $700,000 home, she had her preferred company insurance give her a quote, 19 grand.
Right?
What in the hell? What kind of discounts are you giving the employees of this company?
So you said it was 60. What was the total?
$22,000 a month, or sorry, a year, not a month, a
22,000
year.
Okay.
$22,000 a year.
Okay.
I did find a policy
Second
for them
quote.
with a big company too.
Second quote was 17,000.
way less.
17,000 a year.
Okay. So on average, in Colorado, 10% is the expectation.
10%.
10% rate increase is the expectation for homeowners insurance
Okay.
in 2025.
Yeah.
So that means that you're going to be paying an extra $2,230 a month, an extra almost $200 a month.
Right.
If they just choose to flip a switch and increase your insurance.
Which is insane because we talk about affordability all the time with interest rates. Insurance increases are outpacing mortgage rate increases.
And that's what I was talking about is the big fear now is not people going foreclosure and losing their home. It's the insurance going up and them not being able to cover and pay for it. And like Oscar said earlier, if you have a loan on your house, you have to have homeowners insurance. You cannot have a mortgage without homeowners insurance.
Oh, they'll put a very expensive policy, the bank will, because they have to insure their asset. They'll do it for you.
What happens if we get to a point where a majority of people that apply for a home loan literally cannot afford homeowners insurance? What happens? Lenders can't make money, right?
Right.
Like something's going to break.
We need regulation.
I'm just saying something's going to break, right? Because at some point, lenders are going to get to a point going, okay, wait a second. The only way we make money is if we can give people loans because we have to get paid. But if 60% of the people that we give loans to can't afford the loan because of the ratios, because they can't afford the insurance, now I'm not getting paid.
You think lending companies are going to start buying insurance companies?
I don't know. I'm just trying to figure out what the next
Maybe.
what the next step is because if having insurance is necessary to having a loan, but you can't afford the loan based on the insurance, Insurances aren't going to buy the mortgage companies.
You want to know what's hilarious? The phone call I just took? Insurance.
Yeah.
Tell us about it.
Yeah.
So he's calling because the lender just called him that said that they just switched the policy
Uh-huh.
and they don't have any deck pages to give to him.
Uh-huh.
So they don't know what's the policy, what's on the policy. So he needs to move out loan availability. And I said, and he goes, do I have to terminate? I said, well, and it's a bank owned. I said, the bank's not going to sign it today.
Right.
Send out, to save you time, the amendment with termination. When they see it, they'll either have to sign it or you're saving your client the earnest money. And then and email them that you still want the deal, but you don't have information. They don't have a loan if you don't have insurance. If it dies, you don't have to wait till 11:59 to see if they did it or not. It's already terminated. The next day, revive it, send it, and then amend the loan availability.
So what do you guys think though? Like honestly,
About
if you were to throw out a prediction, like if we get to the point, like there's got to be a break even point where
So I think
if
there's gonna be-
lenders,
I think you nailed it.
if lenders think
They need to
if
come
they
after
see it,
HOAs and insurance.
right? But if they see it, they
Mm-hmm.
go, "Holy shit!" Like we're seeing a lot of loans terminate
that's money out of
because
their
of
pocket.
insurance.
Mm-hmm.
What's going to happen?
Yeah, lender.
There's gonna have to be
not lenders
legislation.
that like in mortgage brokers, right? Big companies,
Mm-hmm.
UWMs, Wells Fargo, banks that lend on mortgages.
They're going to have to do something.
have
Yeah.
to do something
Mhm.
to help regulate the insurance
I-
industry
I think, and that's
because one of the biggest assets
yes,
is,
I think-
is mortgages.
I think we're gonna
That's
see
where they make their money.
regulation via litigation. We're gonna see
I know, but I don't.
Like-
But my point is, litigation we know
Mhm.
takes forever. So that's what I'm saying. I think that
Fast
may
track it
be
through
like the
government.
end all be all, but that could take. You're talking litigating one of the largest and oldest industries in the world, right? Insurance.
But this is the first time that it's been under the crosshairs.
right. So, but what?
How long
what
has
moves,
insurance been around for homeowners?
But what moves faster? Business,
Yeah.
right?
Mhm.
So that's what I'm saying.
They fast tracked us.
I think if you somehow work out the margins where the lenders can offer insurance at a discounted rate because it's built into the margins of the loan, I think that might be the solution.
Or you just
Big-
have
I really do.
Big lenders buy insurance
I do.
companies.
I think that's got to
wouldn't
be.
suck.
I think that's got to be it. And if anything, if that's the threat, I think you see insurance come down in price because they don't want to lose that.
You're in a risk
They don't want to lose that
assessment
market share.
business
You know,
as insurance. You know, I get it. You want your profit margins there, but at the same time, you're going to
Something
go out
has
of
to
business.
happen, dude.
You're going to
Mhm.
go out of business because people aren't going to. They're not
because
gonna
it's a
insure.
double-edged sword, right?
Yeah.
Because either mortgages don't make money because they can't sell loans to people,
and that's big money.
or
trillions of dollars.
insurance doesn't make money because nobody's buying homes, so they don't need a fucking homeowners
Or-
policies.
or do they just move the goalpost?
To what?
Do they just change lending regulations to allow for
No, I don't
higher
think they do
deductibles?
because that hurts their margins. Because if something does happen and those losses do happen, and they have to recoup that money, they can't.
So what we may
because
see,
it's covered by another insurance
what we
policy.
may see
the mortgage
is-
insurance.
Now we're in
policy.
fucking
I just-
insurance inception.
Well,
Yeah.
and there's a
really.
fucking spinning top, and we're just like,
Yeah.
did it fall
What
at the
I
end of the
see
movie?
It was like I just see
We
like
got to
a
have a
Mortal Kombat.
Leonardo DiCaprio. Like, what the hell?
And then Charlie comes and goes, "When the fuck did we get ice cream?"
What I see is just a Mortal Kombat fight, and it's going to be mortgage, like banks and mortgage.
It's got to be, dude,
suppliers
because that's where the
versus
money
insurance
is.
Companies.
That's where the money is.
That's what's going to happen.
and we're gonna be in the middle.
Yep.
We're gonna be like, guys, can
I'm just
we
here to drink my bourbon.
Can we figure this out? What
yeah,
do we think?
I'd like to do some work.
Yeah, like you guys tell me. I'll move the deadlines. I'll negotiate where the fuck we need to negotiate. But tell me what we're doing here.
And Fannie Mae and Freddie Mac did come out and say that they are not increasing. Like they're not going to go from 5% to 10%. It's
For
at
what?
5% for insurance.
They can't.
That's what I mean.
They can't.
They came out and
They
they already
cannot.
said we're not doing it.
No, they can't. They can't.
So it's
That's
good.
what I'm saying, dude.
Yeah.
Like
Because
there's-
it
it's-
shouldn't. It
What is
shouldn't have to
what's
be
the
there.
adage though? The immovable object meets the unstoppable force, or
Something like that.
Something
I mean,
like that.
you're
That's
looking
where
at
we're
it
at. Mm-hmm.
like as Fannie Mae and Freddie Mac. You're looking at it as like I'm gonna adjust my policies to fix your industry.
right?
Mhm.
You know why?
Yeah.
They
Exactly.
shouldn't have to.
No, there
Mhm.
has
It's
to be
that
a-
industry that has to figure it out.
Going to be interesting.
dude. I'm
It's gonna
telling
be
you, man.
really interesting.
Yeah.
And I'm excited that it's on the political radar. That's all I'm saying.
Yes,
I'm
I
just
agree.
excited that it's finally.
What
in
does
the
insurance
crosshairs.
cover?
What do
It
you mean?
depends.
The house, which covers material, which
Yeah.
covers that, and we go back to tariffs.
Yeah.
Shit.
Yeah. Well, and
As much as
that's-
we don't want to talk about it,
but-
does get political again.
But no, that's 100%. That the cost of building a home and repairing a home is going up because of materials, because of the tariffs. So then that's even more cost to the insurance companies. And again, guess what? They're not paying that cost.
Exactly.
We're paying the
paying
cost.
the cost.
We're paying the cost because again, in a cyclical, capitalistic market, people at the top are the ones that set the tone because they have the money.
And once again,
You live in Denver County.
and once again, who's not getting fluffed?
Us.
Us.
I like to get fluff once in a while. So, in another kind of perspective of this, you're getting hosed by the insurance company that Excel had that didn't cover, that's turning around and recouping their money through raising your electricity.
Exactly.
Right.
That's what I was.
We're
when
with
you-
Core in
when you
Black
stepped
Hills.
away, right? When you stepped away, that's what I said. I was like, Excel they're running rampant. They're charging us more now because they have to recoup the cost from the Marshall fires because they didn't
Right.
prepare well enough and have the money to do it.
Yeah.
And at one point they were losing 60 cents on every dollar, right? And so now they're going, "Oh, sorry, we're not." Also, just posting
No, not
record.
Excel.
No, they
No, not
Excel slapped.
Yeah,
They threw money at the homeowners.
Yeah.
And they were like, "We don't want criminal. We're not assuming criminal
Oh,
negligence."
Yeah.
And they're just like, here you go. But that's my point is like, it's all cyclical.
Yeah.
It's all capitalistic. Everything operates together. And Excel's not going to take the hit. The insurance company's not going to take the
Right.
hit. We're going to take the hit.
Yep.
Like that's just how it happens, unfortunately.
Mhm.
But
At the end of the day, start an OnlyFans.
That's what I said.
yeah,
That's the
exactly
plan.
what we said. Community OnlyFans.
Yeah.
I mean,
Each townhome one a week, 1 day a week.
the American dream is find what you like to do and make it lucrative.
If I could cover up the tattoos and the birthmarks and stuff, I'd be on the internet making money having sex. I ain't gonna lie. I'm sorry.
Hey,
There's
you give me $100,000 a month,
what I'm
done.
saying.
There's
bro.
tape and
Fucking
editing,
done.
Charlie.
Hey, trust me, I've looked into it. How do I get away with it? But
Done.
too risky.
Unfortunately, not that I looked into it when I was really young and in shape. And
There is a picture of Oscar in just a bow tie
no,
and
I
some
went as Magic
bottoms,
Mike.
just so you guys know.
I went as Magic Mike to one of Kevin Larson's parties, but it's not lucrative for men. It's only
No, it's
lucrative
not.
for women.
Well, stay tuned on
Charlie's only
all of our socials. Jameson's about to put out a spicy video for listening.
See, I can't go that
Let me
route.
see that booty.
We'll make it happen. But guys, honestly, awesome
Jameson's
episode.
been learning to twerk.
I think that these are the conversations that have to happen.
Yeah,
and
100%.
Everybody down in Colorado Springs for bringing this up and bringing attention to it.
Yep.
News channel for
Be the squeaky wheel.
Yep, hosting it. Just the grain of sand. Be the grain of sand in the gear. Like just bring it to light because if it's not brought to light, they're going to continue to get away with it, and then we're just going to take the blunt force of it.
Be the squeaky wheel that doesn't know. Go out there naive as all hell and let them educate you of what they're doing. And then if you don't like it, I want proof.
Yep.
Mm-hmm.
And then that's how you get educated of why. Maybe you'll go out there and say, oh, well, that makes sense. Or
Yeah.
no, screw you. This needs to be fixed.
So let's go ahead and move into our one rock takeaway for today's episode. And our one rock takeaway is a something just flashed in here. My ADHD went crazy.
No, it's Excel.
They heard us
They
talking.
took that 30%.
They're like, oh, yeah, you want to talk stuff about us?
They shut the
Click.
light off. Our one rock takeaway is kind of just our takeaways from today's episode and today's topic. Either one of you guys want to take it first? Or you want me to take it?
I'll take it first. I'm just going to reiterate what I just said. Be the squeaky wheel, right? There's a lot of bureaucratic things that happen when it comes to HOAs, insurance, policies, and things that they're like we talk about all the time. We do real estate full time. So we know what happens day to day. People that don't do it day to day rely on us, right? Well, there's things that happen in HOA boardrooms. There's things that happen in insurance policy boardrooms, so on and so forth, that we just don't know. But if you don't ask questions, you're at a disadvantage. So if things are happening that you're like, ask questions, be the squeaky wheel, get educated, and hopefully bring it to the attention of the people that matter, the people that are in power, so that, even if it is something that may or may not change immediately, it's something that could potentially be brought to the attention of the people that matter and have some sort of meaningful change.
At least a discussion could be had.
At least, a debate, a discussion, something that can be had because it's important. It is.
I emailed our HOA bitching about waste management.
So, yeah.
They
Be-
were,
be squeaky.
I was pissed. And
So, I think-
I wasn't being a Karen. And
Yeah.
again, you're not being a Karen when it comes to your financial stability.
Especially now when you're paying for the fucking house.
You're paying for this. You're a part of it.
Like, I'm sorry, but
Go put your foot down.
if you're doing it right, that's 35 to 40% of your total income is going to that house. Like, you have
No, and
every right to
you
send
know
an
what,
email.
people, that's a great point. And I'm
My
gonna-
townhome in Littleton, $675 a month.
I'm going to rant really quickly. If you are paying any part of your livable wage to the economy in any way, right? Like,
You have
you're not being a Karen.
No.
You're not. You're contributing to the broader economy. You have a right to speak up.
Yeah.
You do.
If you have kids,
You do. If I
they're
make
taking
any
food
money
out of your
whatsoever,
kid's mouth,
if I make any money whatsoever,
take
and
it
I'm
serious.
contributing that to anything, then yes, you have the right to speak up.
Yeah.
So,
Yep.
I mean, you have a right, period, but have some faith that you mean something enough to go, hey, I'm paying you money. I mean,
and maybe
when you get
sure.
when you get a burger at the fast food joint and they forgot to pay if they forgot to put the burger in your bag and you walk away, are you
Now,
not
don't
going
be
to
a
go back
dick
and
about
say,
it, right? Don't be a dick.
yeah, you're
There's
not
a
going to go
difference.
back and say, hey, where the hell's my
Yeah,
burger?
Don't be a dick.
You're not going to drive away and just be like, they forgot the burger, I paid for it.
Yeah,
No,
don't be a
you're going to
dick.
go back and
There's a difference.
Yeah.
Be respectful.
Yeah.
Like, be respectful
But
of other human beings.
I think for me, my one rock takeaway, and I'm gonna, there's a hill I'm gonna die on, but just get involved. Like, that's it. I'm sorry, but like, you can't. For everybody that like doesn't vote in elections or doesn't go to their HOA meetings or doesn't send emails or talk, or you're not involved, you get that HOA newsletter and you're like, yeah, fuck you, and you unsubscribe, you delete it. You don't have a right to complain.
you better refinance your condo and pay those 20 grand.
What I'm saying is, like, you gotta be involved. Don't sit back and complain about the outcome if you had no part in the outcome.
You can't have an output if you didn't contribute an input.
Exactly, and that's it. Just get involved, guys. And that's literally as simple as just seeing your neighbor outside, going, "Hey, Tom, how's it going?
And he
What do you
goes,
think
"My
about
name's
this?"
Scott, dick.
Like,
I've lived next to you for
like-
10 years.
and if you watch the video in that article, the elderly gentleman was like, "Yeah, everything's done digitally. Nobody talks anymore." And they're right. Like, I don't know the person that lives across from me in my apartment complex. Whereas when I was growing up, we had block parties. I knew everybody, and it's just, I feel this retraction from society, this retraction from this group mentality is causing less and less personal accountability.
The most social media and tech savvy guy is preaching not. What?
Hey, man, you find me in the mountains most of the time.
Me too. Whenever I can.
Oscar, do you want to do one rock takeaway? Or?
I think you guys nailed it all, but at the end of the day, with Jameson's statement of, you didn't contribute, you don't get it's not that he's saying that you don't have a voice because you're paying money. Have your voice, use it.
Exactly. Just use it.
Use it.
Use
I
it.
mean, even if you just want to yell at them, fuck, you're paying them. Go, don't be a dick, but just speak your mind and let someone calm you down. You're paying them.
I, for one, am going
They
to be
gotta
a part
explain
of
to
the HOA. Like, I'm excited because you remember, James, I was the guy at Best Buy that when somebody came in and was complaining about returning an item, they'd call me up and just be like, "Charlie, can you talk to them? Well, I want to return this item." Blah, blah, blah. Well, on the receipt that you accepted and signed on your purchase, it said that 2 weeks was the maximum and you can't return this item. That's our policy. Yeah, but I did it. Sorry, on your receipt it says that you can't. Like, as an HOA, that's what I would do. And be like, I'm more than happy to have this conversation with you. Let's change something. How do you want to change it? How do you want to do it? Don't just come and complain to me.
Yep.
That's it. You agreed to this. But
That is a good distinction, though. If you are going to complain, come with a solution.
yeah,
Don't complain to complain, right? Like, at least work through it and come with some semblance of a thought. Because that is like that is a caveat of mine. Like, if you're going to use your voice,
use it.
like come with something
Have some
proactive.
have
you know?
some body to what
Yeah.
you're gonna say.
Provide
Yeah.
some.
Don't just be
Some
like
texture to
don't
this.
just be like damn but ding damn but last.
Don't mumble rap it.
I love it.
Don't mumble rap it. I want you to be a lyricist.
Yeah,
right?
come straight.
Yeah.
Kanye.
Yeah. Don't
You
be
know?
6'9", be Biggie.
Yeah.
You know what I'm saying?
Well, I'm gonna make that a shirt.
Jay-Z it. Don't
be
mumble
Biggie.
it.
That's
Yeah.
awesome. All right. With that, guys, let's go ahead and move into our bourbon review on today's episode. And on today's
Can
episode,
we
we
do a
are
Glencairn review too?
yeah, right. Yeah, exactly. We're gonna have to just get
I
different
get a
glasses.
10 out of 10 to these glasses. They'll make anything magical.
Right. So on today's episode, we are drinking the Four Roses Single Barrel
This
OBSV.
cranberry juice just has so many layers.
The legs on this juice is great.
I immediately, like right away before I want to get my nose and taste JC's glass. 'Cause
It's gonna taste identical.
You know what?
I bet you it's even more complex.
I got a weird like alcohol-y vanilla pudding kind of flavor coming in.
not vanilla pudding. Oh man, what's the?
this is crazy.
Maybe it is vanilla pudding, but you put it on the hot skillet.
Mhm.
You know what I'm talking about? It's like a pound cake, vanilla ice cream on top. You put it on the hot skillet. It's a dessert at the restaurants.
Fried ice cream,
No, but it's like a cake,
lava cake.
kind of, but it's vanilla.
Crap. I was gonna say
You know what I'm talking
budino,
about?
but that's
I
another.
used to have it.
I love it. This is
Well,
okay.
and I also got like a weird like jungle juice punch kind of deal going on. I mean, it's gone.
Hold on.
It's gone crazy. on me.
That's fucking crazy.
I just like that the burn's gone. I'm getting.
That's two different.
I'm getting. Well, yeah.
I'm getting a lot of toffee, kind of banana toffee. No, it's just there's.
One per nostril.
Make sure you mark where you rubbed your nostril on,
All right, so
because it tastes salty now.
the burn is there, but it's not like overpowering.
Mm-hmm. It definitely opened to the point where like you can smell. Now I can get the plum. I can actually get some more layers of on the nose than I did at the beginning, but it's still way
Like
more
a
detailed.
like a plummy anise kind of,
Here, Oscar, stick your nose in this one.
kind of like a. I don't want to say Jägermeister by any means, but you know.
You have the first pour too, right?
Yeah.
So okay, now nose that and then nose your pour.
Yeah.
Mm-hmm.
Yeah.
Fucking crazy difference.
Like banana bread kind of.
Yeah.
It's. Let me go this. It's like it's evaporating, but then I think it's going back in. So it's like global warming is what's happening actually.
It's bourbon ecosystem.
It's bourbon warming. Yeah.
No, it's
what are those called? Not an ecosystem.
a
It's
geo
Terrarium.
terrarium.
It's
It's a bourbon terrarium.
Yeah, but
It's a bourbon
It's a
terrarium.
bourbon
like a
terrarium.
geodome. You know, it has
The fuck do we get ice cream?
No, even
No, it's yeah.
did you taste it?
No, not yet.
So that. Okay. Yeah, I kind of feel like we have to.
Water.
I kind of feel like we have to re-drink because
it is Friday.
it like you just poured it.
It's brand new.
That's great, and it's been open. It's been sitting,
Oh yeah.
but that's
See.
that is what
Control.
it should like. That is what it should taste like. I feel like mine. I've been swirling. I've been open. It's just sweet. Like mine is just open.
Yeah,
and
mine's sweet. That still has that back of the throat burn.
It still has more complexity to it.
Yeah,
Yeah. Wow.
I love it. Science, baby.
Science, bitch.
The vessel does matter.
Yes, it does 100%. And I'm glad that we figured it
Hooligans.
out.
Oh, it
in
even got me
Brooklyn.
here.
Yeah.
Yeah.
So I'm saying it's like all the way down.
Mm-hmm.
Wow.
Like even though the ethanol burned away on the nose, it
Yeah.
stayed,
Yeah.
and that oil.
it kept the
stayed.
heavy body in the
Yep.
oil.
Exactly. The ethanol definitely evaporated off the top, but the flavor and complexity stayed no problem.
It kind of makes. I feel like it's creating like a layer coat to keep everything in.
Okay, and I think this is the part that's gonna. And I saved this. I didn't ask earlier. Jameson, what does this bottle cost?
What would
$50?
you pay for this bottle?
$60.
I already saw the price, so I can't
How'd you see?
comment.
Oh,
I looked it up.
Okay,
Mhm.
$49.
Good price.
That for $49.
Good.
Pretty
Yeah.
fucking good.
Mm-hmm. Absolutely.
And
all
if you're
day.
a frequent shopper at Bubbles with a $10 credit, it's
Boom.
$39.
Hey-o.
You know what?
Yeah.
Yeah, $49
every penny
though for a
counts
single barrel.
Mm-hmm.
with these damn insurance companies.
Right? It's gonna make us drink.
Yeah, dude. I'm impressed.
It's interesting to me too because
I want to drink the old soul out of this.
yeah, I would. I think Old Soul would be too sweet in this
I don't know
if you let it open.
because it howled strong.
It did. That's what I'm saying. It did 100%. I'm interested to see it though. So maybe that's a special take that we do. But
Gotta find it first.
I'll tell you what, it's the complexity of it in itself is great. The flavor of it is great. There's just something missing for me in it. I don't know what it is. Don't get me wrong, like the complexity's there, but I feel like it's not a flow. It's like A, period, B, period, C, period, versus the whole thing coming together.
I mean, I have an opinion of what's missing. I'm missing that oaky finish.
Boom. Yes.
That carries it through. Like there's not
The classic bourbon oaky finish.
that consistent oak finish that takes you from the alcohol, the ethanol to the sweet to the there's not that oak undertone that carries you through.
And
to me, that's my opinion.
kind of balances the bourbon out and keeps it from running rampant with the flavor profile.
Yes.
And
it keeps it from opening way too sweet.
Yeah, and that's kind of what it did for me.
Yes.
It started off within my flavor profile that I enjoy, but then it started going too much plummy, too much
exactly
that side of it, and it's like
it lost some dryness because that
it's
the
kind of
wood
like
and the
those,
oak would,
those bourbons that are aged in sherry.
yeah.
It kind of tastes like that.
Yep, I think it's missing that oak,
that last
thread that would tie it together.
Yeah, because the
It's
sour's
good,
there,
though.
the spice is
It's
there,
a good bottle.
No,
sweetness
I'd
is
drink
there.
it for sure.
It's just missing the roundness, and that's why it's just something like
It hit the ball
when we
it's
did
rounding second. It's going to third, and it doesn't make it home.
Yes, exactly. Because when we drink Dexter, when we drink Old Soul, it is
Those are
just,
home runs.
Just flow like
It
just
hits and it's
1,
gone.
2, 3, 4, and then it sits. This one definitely sits on the palate, but it's not.
Dexter's more like a walk-off home run.
Yeah.
You don't even walk the bases.
Yeah.
You
Done.
pop it open, you're scoring.
Yep. Absolutely.
This rounded the bases, just didn't finish.
Yeah, I got thrown out third.
So for everybody that is new listeners, new viewers, thank you for coming. Hope you enjoyed the show. But what we do with our bourbon reviews is we do what's called our rock rating. And our rock rating is on a scale of 1 to 10, 1 being the best, 10 being the worst, because the more ice and rocks you put in a bourbon, usually the worse it is. So the closer to 1, the better the score. What are you guys thinking? Where are you guys at?
I am giving it a 4.
Okay.
A solid 4, though. A good 4.
Yep. Awesome.
And it I fall back on that it's a little bit too outside my
it's outside your palate.
my palate. That's the only reason. It's a good bourbon. It's just outside of my favorite.
Nope, I agree.
Mm-hmm. JMO?
Not surprising. I'm going to go with a solid 3.9.
3.9?
3.9.
Okay.
3.9.
I am going with a 3.7. So right in there.
Right
All
around there.
around
If
the
it
same
didn't
area.
have that oak,
If it did,
I
yes.
think if it had the if
or
it had
more
that,
smoke, I don't know, something around
if
those.
it had that more
You know
oak,
what? That is a hell
Smoke
of
it
a fucking
if you
point.
could smoke it.
Yeah.
If you smoke
Some
this,
beechwood.
that would be yeah.
No fruit wood though.
No.
Like
No.
some
like a hickory.
beechwood,
Yep.
some hickory.
Mhm.
Yeah.
It would maybe tie it in.
That white oak, the barrel white
Yeah.
oak.
Yeah, if it had something
absolutely.
a little bit more oaky,
I'd
a
probably bump it
3,
up to like a 3.
like a 3.
Yeah.
Yeah. Agreed.
Absolutely.
Agreed.
Absolutely. It's just missing that end game. But
Good bourbon.
phenomenal episode. Yeah, good bourbon, great buy. Jamie, great pick as always. So you guys know that our episodes drop every week. You can catch our audio across all platforms, Spotify, iTunes. You can watch our video version at Living in Colorado, the Mile High Perspective on YouTube, or check us out on TikTok and or Instagram, catch some clips. You can reach out to all of us at any point in time at our own personal socials.
Oscar the Realtor CO.
You can reach me at Charlie Sardelli for anything real estate. If you're looking to do any kind of media production, video for your business, podcasting, whatever it may be, at Beat the Jeans Productions.
And then the Colorado real estate guy or Jameson Amros on all socials.
Yep. And if you want to get in touch with all of us, schedule. Like I said, guys, we're thinking about giveaways for episode 100. We're thinking about little products that we can give to you guys, bottles that we can give. So with that,
We
let
do
us
need
know
a
what
merch
you want
line.
to see.
Just saying.
Yeah. Let us know what you want to see. You can always reach out to us with any questions that you have. If you want to grab a bourbon, you want to schedule an event with us, let us know. Reach out to us, resotr@themilehighperspective.com, or give us a phone call or a text.
720-584-3361.
And we will get back to you. But on that note, another phenomenal episode.
Yep.
And catch you guys later. Cheers.
See you, everybody. Like and subscribe.
Like and subscribe.
Very nice.
Very nice.
Very nice.
Very nice. King of the castle.
King of the castle.